If you're looking for professional day trading education, high-level trade analysis, and dissection, you have come to the right place. My name is Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to bring you exactly that. Professional day trading education, all here for free on YouTube and on X. And tonight we're going to be going over 3 trades, and we're going to go over this mistake that most traders make, that if you fix this, you will become, well, your day trading will get a lot better. The progression of your trading arc will be much better. So let's get into it. Okay, guys, I hope you all had a wonderful day. Give me 1 sec. Just going to fire up these charts. 1 sec here, folks. Okay, so let's get into it. Okay, so let's first go over the charts and the trades that I took today, this morning. And then we're going to go over the lesson with you, and we're going to help you fix this mistake. So first off, let me see. Yeah, it was Qs first. So this trade, you're not going to necessarily be able to see because it's a dead chart now. Okay. So what we wanted, and I'll go over the trade plans with you. Now, normally we enter into the low level and short the high level. Okay. So it's very simple technical analysis. If we opened here, we came down into this level, we would execute the long. And at the open, if we pop, we would come up and we would execute the short. Okay. It's a very easy strategy. And these levels are struck prior to the market open. So nothing changes. I developed the trade plans 30 minutes prior to the market open, and then we stick with those trade plans. Come hell or high water, those are our trade plans. That's what we trade. Now, there are contingencies to these trade plans. So just in case something reacts differently than expected, we're prepared for that. That's why you see the consistency that you do on this channel. So now let's go over the trade on Qs. So let me turn off this magnet quickly. So what originally I wanted to watch was a crack and breakthrough pre-market low area. When that happens, generally you get a hard snap. Okay. So right in this area, right in here, was the 9 EMA on the daily. If you look to the left-hand side of the chart, this blue chart, that is the daily chart. So we were working off of moving averages. And then as it comes down, because it's not far, it's within about a point, actually slightly under a point per share on a $600 stock or ETF. So it looks far, but it isn't. So we were going to start in there. Oops, I thought I had my pen tool. We were going to start in there, coming into the 9 EMA and the 20 SMA, and then add in to the low of day from yesterday. Okay. But it happened very quick. All we got was a starting position on that. Okay. So we only got the starting position, which is 1 entry. And then as it came ripping straight up into the resistance level, which would be our target on the long, we paid ourselves. So very quick, easy peasy type of trade, walking in. Well, you can see there. I don't want to mention how much profit I made because YouTube doesn't like that and they end up fucking the video. That's why you see very low video views sometimes on the trade recaps, and then other times you do and you don't, you do and you don't. As soon as you mention profit, they freak out for whatever reason. So I'm not going to mention it anymore. The trade is there. You can see the profit. So locking in a decent amount on that trade. So very happy with that. So then I want to talk about where can I go from here? 1 sec. Okay. So from there, as I said, we executed the long, right? So we executed the long here, but then it came up into the next level, which gave a beautiful example or opportunity, I should say, to go short, right? Absolutely flawless, fucking beautiful. So on that trade, as it comes up into that level, we execute the short by buying the 621 puts. So very standard trade. Yet again, that's how I trade. This is as easy as it gets. So it comes up, comes down, pay myself. That's it. Easy peasy on that trade, guys. Lock in coming down into support. So locking in an additional amount of profit on that trade as well, which you can see on the lower right-hand side of the chart. Beautiful trade. So now let's discuss SPY. So this was a profitable trade, but I was also giving a lesson in it. And I'm going to go over that lesson, and I'm going to tell you where you need to fix your trading. So you're going to see a loss on this for $1,591. It actually gave me my secondary entry, which I was going to watch for, but I'll discuss why I didn't take that as well. And that's going to have to do with this lesson. So the very first trade on this, it's very easy. As it comes back up in here, that is a very specific setup that I look for. If it rejects the resistance level and comes down, comes back up, it's creating a trend. Okay. So I'm going to execute that trade. It's something very specific. There's a few other things to it, but it doesn't have anything to do with this video here this evening. So execute that trade and lock in on the ride down. Okay. So that's the initial trade. And then what happened is we ripped up rather quickly. So when it did that, when it came back into here, you can see another entry, and I'm going to continue to work the trade. Okay. This is not a large position at all. And I've already locked in a fair bit on the morning. So I'm okay with that. The reason for this, if you take a look, I'm going to clean up this chart so that we can take a look at the daily chart, because there was a lot of potential in this. If we got below roughly that level right there that I just drew, if we got below that, there's a lot of potential on the trade for it to come all the way down. Generally speaking, the odds dictate that once it gets through that, that's it, lights out. Because it's the 5 EMA on the daily, it'll go from the 5 to the 9. It's very simple, traditional technical analysis 101. Okay, once support breaks, it'll retest its resistance and find your next support. Very simple, straightforward stuff. And it's a nice wide gap down there. So there's a lot of potential, right? So I want to work that trade. Now, I'm not working with a large amount of money. I'm thinking about the amount of profit I've already locked in the morning. Okay. And I don't want to lose that profit. Remember, there's a lot of you out there that are trading always to make the biggest trade instead of making it about a calculated decision about how much size to use, what you've already locked in. And there's a reason for that. The reason why you're doing that is because, number one, you're new to trading, and number two, you're not a professional trader. So let me explain why that matters. A professional trader trades professionally, right, in all aspects of that, because he or she, his or her trading depends whether they'll be able to pay their rent or their mortgage or their car payment or whatever, if you have car payments and mortgages and everything else, right? Paying the bills, essentially. So they're focused on keeping the lights on at home and food in their family stomachs, because that's their job. It's no different than the job that you go to as a 9 to 5 as you're learning to do this. You have to show up in order to get paid. Now, trading's a little bit different because you can show up all day long and make negative money, right? So if you've already locked in, you need to think professionally. And sure, you can always execute a secondary or even a third trade, right? You shouldn't be trading any more than that. That's crazy. Okay. But if you take a secondary or even a third trade, you need to think about what you've already locked in and what you're willing to whittle back. Okay. So it's risk reward. You don't want to ever go past and have maximum risk where you would go red on the day once you've already locked in green. You understand? That's foolish. Now, I will say, not to contradict myself, but there are times where there is the potential on the chart is too big not to take that trade. Now, today is not one of those days. This is a very standard basic bitch type of day. I'm talking about big opportunity days that come up probably once every, I would say, month, once every 3 weeks to once a month. You're going to get a really perfect setup where, yes, if you gain in the morning on one specific trade, on that secondary trade, if I'm willing to go red on it because of the potential for it. Okay. So another thing I want to talk about, so that's the first part, is your sizing. Number two, not giving it the full length of the trade. So let's talk about when it comes into here, right? So that essentially, that's not my risk. That's my original entry. So I'm going to add there. When it comes up into this area, this is the high water mark. We no longer want to hold once it breaks. So we're also watching Qs. Qs is coming up and it's a little delayed for it breaking this. It broke, but just barely. Okay. So, and it's already starting to pull back. So there is a high potential for this to fail this level that it was testing. It's now broke. And if you look at the crosshairs, the timeline crosshairs on Qs, where I'm pointing right there to where it is on SPY, that's right here. So that's why I'm continuing to hold. Qs has a lot of resistance there, a lot. It has the previous close and a moving average right there. So I'm basing my decisions off of Qs, even though I'm trading SPY. This is why I trade SPY and Qs, and that's it, because you can work off of those charts, right? If you're working too many charts, you're gonna fuck it all up. So I'm gonna zoom in a little bit now, and I'll show you how I stopped out in this. And you're going to look at this and you might think, well, you stopped out right at highs, but it's already hit the point. Like this here was my high water mark. As it's squeezing up, what I'm doing, you see at my exits here, how there's multiple exits. Those are blocks of 10 contracts. I didn't have a big position. It was a 40 contract position. So as I'm locking or getting out, I'm peeling out little bits at a time, blocks of 10. And I'll tell you why. What most people will do is once it hits that resistance, they're going to freak out, take the whole position off. Now, sometimes what can happen here, actually, a lot of times what will happen, it'll come up, it'll break that level just by a little bit, and then come right back down. And then you stopped out literally at highs, and then it goes in the direction you want. Now, this isn't the greatest example of that because it didn't go much higher, right? And then it came back down. But I'm okay with that because at some point you do need to cut the trade, okay? And I understand, right? Because I've been doing this for over a decade, that even if I stop out right at the top, which I did, the next trade, once it slices through, it's going to pop back up, which it did, and you can execute that trade short on the retest to ride down. It's a way to get back in the trade, which would have worked. So why didn't I? Which brings us to the next lesson in this. You need to be content, okay? If you're not content and you're not thinking about risk, what you've made on the day, and how you would size, on this trade here, for me to execute this trade, it would have to be done with such small size. To me, it's not worth it. Okay, I could have executed with, I don't know, 20 contracts, 50 contracts, maybe, and I don't even know, and giving it up to highs plus confirmation, and then I would be roughly at $0 made on the day. I don't want to do that. I don't want to risk what I've made when I've already locked in what I've locked in. It's thousands of dollars where I've already got that in my hand. So even though the opportunity is there, I see the opportunity. It's a beautiful opportunity. I don't need to take it. I, as a professional that has emotional control and self-control, knows that I don't need to take every opportunity, even though I see it. These 3 lessons that I just gave you, you're most likely doing the opposite. And that's why you're spinning circles in your trading account. You'll grow it, you'll dump it. You'll grow it, you'll dump it. You'll grow it, you'll dump it. If you were to make these changes and implement these changes, there's almost a 0% chance that you wouldn't start growing your account. That's how much these 3 things matter. Now, there are other things that you could potentially be doing, but I would be willing to bet that these are the biggest mistakes other than not following a proper strategy, all the basic stuff. I'm saying if you're already following a strategy that you know works, these are the things that you're doing. And you may want to blame the strategy, blame the person you're learning from or whatever, and it may not be them. What it probably is one of these three things, two of these three things, or three of these three things. So think about what I talked about here and make those changes. And if you're thinking that you don't need to make those changes, you're being ridiculous, because you're watching a video on someone that doesn't consider themselves a fucking YouTube trader. I just happened to post on YouTube. I've been doing this for over a decade with wild success. You probably want to listen, because these changes, if you implement them, will absolutely, the odds are going to show that you will turn your trading around. And they're easy changes. You just have to have self-control, discipline, and always think in a professional capacity. Always think about locking in. You have to lock in. You can't be looking for those big trades, folks. If you are, you'll fail. And some people, when they're at a beginning stage of their trading, they'll make money on a big trade. So maybe they made 10,000, 20,000, even 100,000. Maybe they fucking made 200,000 in a trade. Maybe, right? Let's say for the sake of argument, they did. They will not keep it. Any asshole can make money in the stock market. Only the smart ones and the disciplined ones keep that money. It's no different than going, and I don't like using examples like this, but it's similar, not the same, but similar to going to a casino. How many people can go to a casino, sit down at either a slot machine or a table, doesn't matter, make money and walk away? Very few can, right? And that's why the house always wins. And in this case, the house is the market. I will not allow it to win. There's no fucking way. I won't do it. Discipline, self-control, professionalism at all times behind the desk, and you'll kick ass. So if you want to learn how to come implement these day trading strategies, come to tricktrades.com and work with someone that can actually get you there. And if not, you want to continue on the free stuff and spin and chase your tail, go right ahead. There's 1,500 free videos for you to search through on my channel alone. So fill your boots. Okay, guys, I hope you all have a wonderful evening, and we will see you tomorrow. Adios, guys.